Everybody's Ken McElroy, and thank you for listening to our podcast. So as you guys know, in order to pull off these large investments and managing all these investments, we utilize a lot of people here. And so on my show today is one of our team members, Jen Costanza.
Thank you for having me.
Hi, Jen. And so Jen has had a number of roles in our company, even actually my assistant.
Yes.
For years.
For years.
Those were the best years of your life.
Best ever.
But she has now her own company, so she's subscribed to a lot of the philosophies we talk about, which is setting up your own business. And she has her own LLC, and she's her own consultant, and she goes and consults for lots of different businesses, including ours. And one of the things that we asked her to do, because she understands it so well, is manage our investors, right? So we have just roughly about 1,400 people on a list that are all accredited investors. So this is really about them. So Jen, what, in your opinion, is the number one question that most investors ask when they first come to us? You know, I know a lot of them call, a lot of them email, some text, some direct message, et cetera, et cetera. We get multiple investors a day asking about our investments, about our company. What's the number one question from the investor to us?
They want to know what MC's investment philosophy is. So they're going to be giving us their money, and they want to know what we're going to do with it, how we're going to use it, and what as a company can they expect from us.
Okay, and so obviously that's like what kind of deals are we investing in, right?
Yep.
What kind of company are we? Even though they've pretty much vetted us out, right? How do they come to us? How do they find out about us mostly?
The internet. Every day I get several emails from people wanting to invest with us. When's going to be the next investment? When's the next opportunity to invest with MC? So I'd say they're garnering their information about us from this podcast, getting to know you, and also the MC company's website.
So let's talk about that. So when you're talking back to them and talking to about our investment philosophy, which by the way, we haven't had a discussion prior to this, so this is going to be interesting. What do you tell them?
I tell them that MC's philosophy is they treat people the way they would want to be treated themselves. I know that's a little bit cliche, but let me give you an example. Someone calls and says to me, I've got $55,000 and my friend invests with MC and you guys are wonderful and I want to invest my $55,000. And my answer to them is Ken and Ross do not want anyone in any position where the investment would have a possible negative effect or that you don't want to rely on this investment for your livelihood or
right.
for a return on a savings account. It's not like that. That's just not what MC wants to do. And that's why we work with accredited investors.
Right. And so the investment philosophy is we work with accrediteds, but then they want to kind of know what we invest in, right?
Yes.
So how do you handle that?
So I glean a lot from walking around the office. I eavesdrop a lot. But we know it's a multifamily assets and land, of course.
Let's don't forget that you also handle all the investors we already have.
Oh, yeah.
So not only are we dealing with the 1,400 that are on our list looking to invest, but we have hundreds and hundreds of investors already that get quarterly statements and checks and financials and things like that. And so there's a ton of questions around that. So you do know what we're invested in.
Yes.
And you do know how it's performing.
Right.
Because here's the bottom line, guys. When an investor invests with you, your report card is literally the check you give them back. Period. You can fluff and talk about all you want, but at the end of the day, when the rubber hits the road, if you say, give me $1 million and I give you $100,000 back in 1 year, that's a 10% cash on cash return. That is where the rubber hits the road, right?
Yes.
And candidly, some of our investments are amazing and some are tough.
Yes.
Right?
Yeah.
So we have our own challenges too, but we're fully transparent with that. And so you kind of deal with a lot of these investors so what are some of the conversations that you have with them?
Well, to your point, when they're not getting a distribution check and they call me and they want to know why, they want to know what we're doing about it, and that's my job. That's our job as a company, to make sure that they know that it's not like, well, too bad you didn't get your check. Let's hope again next quarter. I have Leslie Bryce, the president of the company, who can help me with anything that's going on at property X. Well, this investor wants to know, hey, there's not been a distribution. What's happening? What are we doing to address the problem? And I make sure that they know that the problem is not only theirs. We see it most likely before they do.
Oh, yeah, for sure.
Yeah.
In fact, it's funny because here's the way it works. Investors don't blow up your phone if they're getting cash, which makes sense. So if I'm going to tell them that I'm going to provide a return and then I don't, that's when the calls come in. And so there are definitely things and reasons, like we had the hurricane in Houston that, we lost 100 units in, and we have fires, and those are disaster things, but we also have management issues where we've hired somebody poorly and, we lost like 2 or 3 months of, because we didn't end up replacing them quick enough. And so there's basic things that happen. These are long-term investments. So as long as we have a plan around it, and an explanation, generally these are pretty easy conversations.
Yeah, and the reason why they're easy is because even for most of the newer investors, they've come to us either from current investors, friends, whatnot. They know how we deal with people. And getting back to the philosophy is we're always going to say, hey, this isn't going right.
Right.
We're not going to pretend, like you said, fluff, that it's not. And we're very transparent with our inadequacies.
Yeah, and our reporting. So we're online. People they have their own account, just like any, like an American Express account or whatever. You go in, you put your information in, you log in, you have your account. It shows all your investments. It shows your investment balance. It has the business plans on there. So we have a pretty sophisticated platform for software for investor management. And actually, we're upgrading that next year.
I know. I'm very excited about that.
So that's going to be available in an app, so people can pull up on their phone and look at their investments, et cetera, et cetera, et cetera. So there's a lot being done on the investment side. One of the other questions I know a lot of them ask are the target markets. So what do you talk when you're talking to them? How do you handle that one?
Well, let's say, what about senior housing, or what about student housing, or hotels, or more commercial? And generally, this is my statement. Ken and Ross are always looking for valuable assets that make sense.
Right.
It doesn't matter if it's going to be another commercial building. If it doesn't make sense, it doesn't make sense. And if I have any further questions, again, I've got a great repository of people that can help me.
Right, and you're in the office almost every day anyway, and we go over all this stuff one-on-one. But here's the bottom line when it comes to target markets. And I think what happens a lot of times is people decide on a market, and then they go all in and they sell the heck out of the reasons why they should be there, right? So they're saying, oh, yeah, you need to be in Orlando because of this, and they say all the buzzwords. But at the end of the day, again, if the rubber hits the road and the property's actually producing, there's a lot more to return of capital than just the target market, even though it is probably the number one question. People want to know, because Phoenix is an incredibly hot market right now, which is where we are. And of course, we have lots of stuff here in Phoenix, but it doesn't necessarily mean that we buy the land right, buy the property right, buy it in the right area, and maybe we overpay, maybe we don't overpay, et cetera. But the bottom line is that while the target market is important, it's not the most important. There's a lot of things that produce a return.
Well, and I think that the first question, it really is part of that second question. We're very strategic. So the philosophy and the strategy, that's where you figure out where that target market is. And you don't just jump the gun because it's a hot market.
Correct. So I'll give you guys a great real story that happened. We decided to sell one of our properties in Houston, Texas. we had tried everything to grow the revenue on that property. The occupancy was decent. It was like 93, 94%, but we couldn't move the rents for whatever reason on this particular property. We tried. We put money in the units. We upgraded the appliances and the flooring, and we painted them, and we did all kinds of things that you would make, just like you would remodel a home, you'd make it look better than maybe something that was 10 or 15 years older. So we couldn't move the needle on the rent. And at the same time, expenses were going up because expenses do go up. So utilities go up, just a couple points a year. Taxes go up, property taxes. Insurance rates were going up in the Texas area because of hurricanes and things like that. So we had, a rise on expenses and a kind of a flat on the revenue. So my partner Ross and I, we decided we're going to sell this. So we listed it. And we put it into escrow. We had a lot of offers on the property because it's beautiful, gated, built in the 90s. It's absolutely beautiful property. But operationally, we couldn't move the needle. So we listed it. It went into escrow, and this guy put $100,000 up, non-refundable, and started due diligence. And during due diligence, I got an investment package from his company. So I'm the seller, and I get Ross. I sent it to Ross. I go, check this out. This guy just sent me this business plan on a property that we own. And oh my God, we were dying. So of course, open it up. Guess what? Houston, it's on the rise. It's the best, it's the best market in the country. The current management sucks, which is us. There's a big value add opportunity, which are the buzzwords that everybody uses. And, we're going to get $100, $150 more per unit, all the stuff, right? Basically throwing ownership under the bus, which is part of the shtick, and saying, this is what we're going to do, right? So anyway, at the end of the day, they ended up buying it, and I hope they do well with it, actually. And I don't even actually know whether they are or aren't. But I can tell you, I did understand that property. I knew what the numbers were. I knew what we sold it for. We sold it for a very, very high figure. And I also know that there was not a value add opportunity because we had already tried that before we listed it. I think they probably assumed that, hey, there's, what I mean? So the real issue that I want you guys all to understand is that they raised the money and bought the property.
Yeah, at the end of the day, that's
actually what you need to understand is, two different companies, two different viewpoints on the same property. One raised, I think he raised about $8 million to buy the property in equity. And we sold it. We sold it for like a 4.2 cap, which we just killed it. And our investors were really, really happy. And so we let that one go. The point is that be careful when you're investing because anybody can put anything on a piece of paper. And so one of the most important things you can look at is track record and verifying all the information inside of the business plan. That's the hardest part. Right?
Yeah, track record. That's also a yes.
Track record.
Mm-hmm,
right?
Track record.
So if it's a new syndicator that's trying to make a bunch of money through commissions and things like that, I'm not saying that they're buying incorrectly, and I'm not saying they're doing anything wrong. What I'm saying is that you have to know the questions to ask, because if you don't know the right questions to ask, you're just going to throw people your money and hope that it all works out, right?
Yeah, and that's not our philosophy. Hope that it all works out.
Right. And I know one of the investment philosophies for us are long-term holds and return the capital tax-free. And that is one of our investment philosophies. In this particular case, where we sold that deal to the new group, theirs was a value add sale. Nothing wrong with it, just a different philosophy. Theirs was buy something, improve it, grow the value, hopefully that worked for them, and sell it. And so that's what we call a capital gain strategy. And ours is a cash flow strategy. So we like to buy, have the property produce cash flow, be able to utilize the tax benefits around all those, and hold it long term and put new financing on there and scoop the money back on a cash out refi, which is tax free. That's our philosophy, but that's not everyone's philosophy.
Yeah, just a different business model.
It's just a different business model. So when they ask about investment philosophy, which is the number one question all investors ask, that's one of the most important things. So what is it you want to do with your money? Do you want to invest it with a company that has a long-term strategy of using tax advantages and cash flow, et cetera? Or do you want somebody who's doing a capital gain? I can assure you the capital gain strategy is a lot more sexy. Buying something and remodeling it and making it worth more and then selling it, and making a bunch of money is way more sexy, trust me. But you also have major tax advantages, or tax disadvantages for when you sell. You have capital gains tax and all those kinds of things, maybe even depreciation recapture. But then in addition to that, when you get all your money back, what do you ask again? Okay, now what do I invest in, right? So that's the challenge with the capital gain model versus a cash flow model. So just be super clear on your investment philosophy when you're managing your investors on what their philosophy is, because most of ours know, don't they, that we don't sell.
Yeah, but infinite returns are also sexy.
That's right. That's right. That's right. We're going to be talking a lot more about infinite returns too. But that's right. People don't completely understand what those are. And basically what that means is you give me your money and I give it back to you, but you're still an owner in the deal. So you have 100% of your capital back and you continue to get infinite returns on, from the cash flow from the property. And so we're going to talk a lot more about that in another podcast. Nice job.
Thank you.
Yeah.